Dow Jones Industrial skidding about 23 points on concerns about, obviously, the situation in Britain and a big bank that could be in big trouble. We'll tell you about it in a second. And a better than 106-point drubbing south of the border. The Mexican market continues to cascade southward. The Dow at 39.88, well below now the 4,000 levels eclipsed last week. The trannies down 17, the utilities down nearly 2. Broader market averages weren't much better. The S&P well off record levels reached over the last couple of weeks. 4 1/3 points southward. The Amex down better than 2. Look at the NASDAQ. That was down 6.5 points today. The long bond, though, bucking the trend, as many people interpreted this as a sign that people were going to go find quality. They searched it out on Uncle Sam stuff across the spectrum. A good performance for the bond market today. The yield now at 7.47%. I believe that's the lowest since late August of last year. Well, topping today's business headlines, Britain's oldest merchant bank has gone bust, sending shockwaves around the financial world. A young Barings Brothers trader based in Singapore allegedly caused the debacle by losing $1 billion. That's $1 billion in unauthorized derivative dealings. Although Wall Street remained fairly calm, the Clinton administration says it's still trying to keep its wary eye on the situation.
We, are going to watch this failure, this bankruptcy proceeding carefully to see what implications, if any, might arise for the American people. So far, it's had an effect on currency markets and on securities markets, as you know. That has an indirect impact, if not a direct impact, on some Americans, and it is a source of concern to us, and we will monitor it as the Treasury Department properly is doing so at the moment.
But panic did strike investors south of the border. Mexico stock prices plunging on renewed concerns over the government's ability or lack thereof to deal with the country's economic crisis. The bull says we've been reporting just swooning today, down nearly 107 points to 1464.52. What to make of all of these global developments and their impact on our own markets? Let's address that with Roy Blumberg, our market analyst over on Wall Street. Hi, Roy.
Well, hello, Neil. Indeed, the global pressures are putting a little bit of pressure on the U.S. market, more so in the equity market than the fixed income market, as we had a flight to quality there. But as you can see by the Dow's close, not any big downside impact. Let's take a look at our technical indicators and show you the condition of the market today. First breath, we had 603 stocks up and 1,625 down. That is breath weaker than a Dow down 23 points. So underneath the surface, there was a little more pressure than the Dow suggested. This is a negative today. As for the volume, 285 million shares. The volume didn't suggest any panics to the downside today, though we feel lighter volume is actually more negative during declines. This is a negative for today. As for the advanced decline line, well, today's breadth is the first really bad day of breadth we've had in a while. The advanced decline line still having intermediate problems, but the short-term trend still remains up, and today's action did not break that. It's a short-term positive. As for new highs and new lows, 39 new highs today, 78 new lows. The high-low numbers are pretty amazing considering the Dow was only a day or so away from making a new all-time high. They've actually been rather bad, and it's a little bit of a concern that the new lows are again expanding. We will watch this very carefully. As for the ARMS index, 10-day moving average of ARMS at 0.98. That's essentially at neutral, while the 5-day average is at 1.06. Despite the big move that we've had to the upside in the market, the 10-day average did not reach overbought levels. Both are rated neutral right now. As for our trend watch, long-term trend remains up. Intermediate-term trend of the market remains up, and the short-term trend is down. Well, Neil, there's no question that the rally in the bond market, the flight to quality, tempered any weakness in the U.S. stock market. The market is extended enough that any short-term negative news should give us a little bit of correction. And in fact, if we follow through tomorrow morning on the downside, the Dow may pull back into the low 3900s, an overdue correction. Back to the studio.
All right, we were just saying the same up here, Roy. Thank you very much. Roy Blumberg at our Wall Street Bureau. Bill Wolman joins us right now. Bill, of course, the chief economist at Business Week magazine. That doesn't matter to us. He's the chief economist at CNBC. That matters to us. All right. How's it going? Happy Monday.
Thank you. You too.
All right. What do you make of these global developments? Every time people say you got the derivatives problem bucked, along comes another new catastrophe.
Well, what I make of him is this was not exactly rocket science that this guy in the Singapore office of Barings Brothers was doing. You know, he's just trading in options and futures on the Nikkei, the Japanese market. And it seems to me that the problem is very similar to the jet problem that Kidder Peabody. It really does. Lack of policing. Somehow the systems really seem to fail in supervising this kind of thing. And the question,
why can't you? This is a dumb question. Why can't you just mark to market and track it that? You know, I mean,
well, the answer is I can't answer that. I'm not an expert on financial controls. Anybody would be very glad to tell you. But the thing is, I mean, if you start talking about regulating derivatives as a consequence of this, I just think it's the wrong way to look at it. I think what you really have to do is try to find some mechanism by which to control these transactions. It's kind of funny, but to me this strikes me more like computer fraud than it does like a market out of order or a market out of equilibrium. It's sort of a mess. I mean, this guy just, he lost it, and somehow the company didn't pick it up. And
but aren't even the people who like these things, aren't they even going to start stepping back and saying, all right, we'll look at Dell, look at Gibson Greetings, look at Orange County, now look at Baring Brothers, and start saying, it isn't even worth the fuss.
Well, I'm not so sure that's true. In fact, there's been a great move to conservatism among American commercial banks in terms of dealing in derivatives. There's no doubt about that. So there has been a backing off. This sort of happened in Singapore, and I just find it hard to explain. The thing I really hope that there's no move to regulating derivatives that comes out of that. I will tell you one thing, the Japanese have been dying for a long time to get regulation on...
Tonight at 11 on Channel 2 News.
On Sunday, March 5th, you will see an extraordinary television movie event.
You ever come across horses that never would give up being wild? You strike me as a man who might do the same thing.
Oscar winners Tommy Lee Jones and Sissy Spacek in The Good Old Boys will premiere Sunday, March 5th, exclusively on TNT, the best movie studio on television.
Welcome back. Smith Barney downgraded 3 personal computer stocks today. Compaq and Dell cut to underperform from neutral, with Apple sliced to outperform from buy. The analyst was not available for comment. Here's how the stocks fared, all lower as you might expect. Compaq down 3/4, Dell down 2 1/8, and Apple down 3/4. Separately, by the way, Apple says it has settled a case involving a secretary who claimed she wasn't adequately informed about the potential for injury from keyboard use. Nancy Urbanski says she lost her job because of repetitive stress injury and accused both Apple and IBM of negligence. An IBM spokesman says the company does not plan to settle. Well, United Auto Workers and Deere & Company have reached a tentative agreement on a new contract. That new deal would cover more than 10,000 workers in some 6 states. Details are now being withheld pending the ratification this weekend, meetings this weekend at which it was ratified. Shares of Deere down 3/8 on today's trading session. Well, our technical analyst John Murphy joins us now. Time for Tech Talk, as it often is on Mondays, Wednesdays, and Fridays. Good to see you, John.
Good to have you back, Ted.
This was, thank you. This was an interesting day to come back to as well, because we saw sharp weakness in certain overseas markets. The U.S. market, although falling below 4,000 again, holding its own relatively, but the theme was flight to quality, out of stocks into bonds.
Yes, and it started in Japan, which is where most of the damage was done, Ted. But it kind of set the stage for what we saw around the world. Let's begin by looking at the Japanese market itself. We have a chart of the Nikkei 225 going back actually 3 years, and the technical damage that was done overnight, with this market closing down about 4%. This is the first time that we have slipped below 17,000 since the end of 1993. So this is the steepest drop, or the lowest level in over a year. But more importantly, notice that green trend line that we have drawn under the lows of the last 3 years. We have slipped below that. So that is certainly a technical negative. What we're looking for now is a continuing decline down toward the lows that were set where that yellow line is, right at the lows that were set at the end of 1993, down around 16,000. That is the next possible support area. It looks like we may get down and test that. So a lot of technical damage being done to the Japanese stock market.
But of course, if you're the Japanese bond market, whole different story.
Very much so, Ted. In fact, that kind of set the tone for what we saw around the world today. What we're going to do with our second graph, we're going to compare the stock market on the left to the Japanese bond market on the right. And as you can see, this has actually been going on for a while. This is the last 3 months, but you can see it even today with the, well, you can see as the money has been coming out of the Japanese stock market, it's been finding its way into the bond market. And even today in particular, it was much more dramatic with the Japanese market plunging 4%. We saw very strong buying in the Japanese bond market. In fact, it hit a 6-month high. And we saw that all over the world today. Even in the European markets, we saw weakness in virtually every stock market in Europe closed down today, but we saw strong rallies in many of the bond markets, especially the German bond market, which set a 6-month high today. So we saw less dramatic as you moved around the world, but we saw money coming out of stocks and finding its way into the bond market in a flight to quality.
And likewise here, further west, we saw the same thing, and we saw outflow from equities and inflow to bonds.
Very much so, Ted. And one way that you can do that, we do a relative strength analysis of bonds versus stocks. And we're going back again here, in this case, just the last 100 days. What we're doing here, we're simply I'm taking bond futures prices in this case, and I'm dividing it by stocks, which I'm using the S&P 500. And this is just the last 100 days or so, or the period of time since last November. Now, bear in mind that since the fourth quarter of 1993, bonds have been underperforming stocks, which meant that you'd want to be out of bonds in stocks. But notice that the ratio actually bottomed in November of last year when the bond market started to move higher. We spiked up a bit. Since the middle of December, you can see the ratio has been weakening again. But if you look to the far right, you notice that today bond futures jumped 20 ticks today, a very strong rally in bonds, whereas the S&P was down 4 points today. So, and as you can see, I've simply drawn a downtrend line along those peaks, and as you can see, we have broken that downtrend line. So it suggests that, at least for the time being, that money, nervous money coming out of stocks is finding its way back into the bond market.
We're looking at yields about 7.47. We've gone below 7.5%. On a yield basis, is 7% doable?
Maybe eventually, Ted, but the next target down around 740. Those are the lows, 735 to 740. Those are the lows that were set during the summer of last year. So it looks like we're going to head down and test. I'm using 740 as my next downside target.
Obviously, we are seeing some improved performance in bonds, and the CRB index is not cooking, and precious metals not doing much of anything. Certainly gold isn't, and in fact, silver had one heck of a lousy day today.
That's right. The silver market really broke down very badly today, Ted. We're going to finish up with that. We have a chart of May silver, and this market has actually been moving sideways since last November, between $4.60 on the downside and $5 on the upside. You can see we broke down, we sold off sharply on Friday. We were down another 14 cents today. We actually closed at $4.54. This is a 12-month low in the silver market. And Ted, this also, by the way, kind of confirms something we talked about on Friday, that the link between interest rates and the silver market, we talked about that with signs of economic softening, not only are we seeing a breakdown in the silver market, but the aluminum market and some of those other industrial metals
in general
are starting to break down as well. And if that's symptomatic of some economic slowing, that would also support the view of money flowing back toward bonds and away from stocks.
30 seconds or less, Mexico, boy, huh?
Just more bit. In fact, this was the weakest stock market of the day, Ted. The Mexican market closed down 7%. It's the first time we've been below 1,500 in over 2 years. We closed at 1447. The next support level, believe it or not, is at 1,250, which was the 1992 low. Telmex, the most active on the big board, is within 2 points of its all-time low, down around 25. So no sign of a bottom in Mexico yet.
Okay, thanks, John. See you Wednesday. Technical analyst John Murphy. It's been a long time coming, but one financially plagued U.S. airport is about to open its runways to commercial traffic. Maria Bartiromo has the story when Market Wrap continues. Don't go away.